All right, let's talk some more about the economic impact of the oil situation and other things. We'll bring in Michael Faulkender, former Deputy Treasury Secretary, and Mohamed El-Erian, Allianz Chief Economic Advisor. Gentlemen, thank you very much. Mohamed, stock market has done very, very well up to now. Profits are carrying it. Profits are the mother's milk of stocks. But just, now we're sort of edging in. Oil prices are up 30-something% from the lows. Gasoline prices are up. In the bond market, the 10-year Treasury is 470. That's not the worst thing in the world, I know, but it is up 40, 50 basis points. Mortgage rates are 660. They've gone up about 60-something basis points. The Federal Reserve meets next week. Interest rates, inflation, another temporary bump. We got inflation down last month. What happens this month when we get the July report? And how do you see this story? Should the Fed do anything about it? I know the Fed controls money supply, not the oil supply, so that's important. But then again, crazier things have happened. What do you think, Mohamed?
So, Larry, and thanks for having me. We have two things coming together that makes the financial side a threat to a very strong real economy. First, it is supply route disruptions. You've just talked about them. High oil prices that push up borrowing costs. That's a burden on the economy, both of them. And the second thing you have is massive, massive bond issuance coming up from the tech companies. We saw the Google and Tesla results. The capital expenditures are a good thing for the well-being of the economy, but they need to be funded. So the real economy has to deal with a borrowing cost shock, a oil price shock. I think the real economy is in a good place to deal with it. We saw the initial claims numbers today, very strong, the best since the 60s. That's a great number.
Yep.
But it's going to be tough for the central bank. I think they should stay on hold, but I guess that Kevin Warsh will have a few people to convince on this.
Yeah, well, that last sentence there, that's an interesting point, Mike Faulkender. I would bet Kevin Warsh would want to stay steady. I mean, the rhetoric is strong, anti-inflation, price stability. That's good. They're waiting on the task forces. So I always argue, they won't do anything much until these task forces report at the end of the year on inflation, balance sheet, productivity, and so forth. But as Mohamed inferred, there's some hawks, inflation hawks that might look at this bump up in oil and they might jump up and down and say we got to raise rates. What do you think? What do you think, Michael?
I think if you go back to the core inflation number that came out for June, you saw that we had a flat month. All of the inflation that we're really seeing is on the energy side, and as you just said, monetary policy does nothing to address temporary shocks to energy markets. So I would look through the energy shock and recognize that were this situation in the Middle East to be quickly resolved, you would see oil prices come back down, and you'd be in line with getting to a two-handle on the headline inflation number, probably lower on the core number. And that suggests that you should take a wait-and-see approach. I think it was a mistake long ago. I hope these task forces recognize the mistake to ever tie yourself to the 2% number specifically on PCE, because then that subjects you to these temporary things over which monetary policy has no effect. If you look at forward rates, if you look at where markets think inflation expectations are going, they remain anchored around the price goal, and I wouldn't see reason to raise rates in light of a temporary oil shock.
Right. I tend to agree with both of you. You're both, I think, agreeing, and I think Kevin Warsh will agree. Mohamed, it's interesting. You mentioned the low unemployment claims. The labor market's doing very well. Business is very strong. Profits are very high. Productivity is very high. Unit labor costs are low. That's helping the profit story. I also notice bond rates are going up to 470. That's not the worst thing in the world, but they're, 40, 50 basis points higher than they were maybe a month or two ago. But the other thing is the dollar is very strong. We're not losing any ground on the U.S. dollar, at least on the, DXY ICE comparison. So that tells me, momentarily we've got some things going on in the Middle East. Our president looks like he's going to clear them up very soon. It just tells me we're still in pretty good shape, Mohamed. The economy, productivity, profits, the dollar, gold prices are way down. I don't know. What do you think?
Unambiguously, we are so better placed than Europe, Japan, or China. Yes, absolutely. And that's why we continue to attract capital from the rest of the world. Look at our growth dynamics. We dominate. The one thing I worry about is that in addition to what we talked about, we're going to have to manage with the spillover of the problems in the rest of the world. I look at the yen every morning. It is at 40 years lows,
Right.
and they don't know what to do with it.
Right.
I look at UK borrowing rates. They're 5.10, and their economy is weak.
Right.
So yes, absolutely, we dominate the rest of the world, and we're going to have to navigate spillovers from there.
Mike Faulkender, only got a few seconds left. I am on a nightly basis asking for very simple things, Mike Faulkender, things that you and I have talked about for many years when you were in government and out of government on this TV show and your work at AFPI. I would like to see large-scale spending reductions of fraudulent and corrupt programs, and I would like to see some middle-class tax relief so they don't have to pay capital gains on Joe Biden's inflation. I don't see what is so darn hard about that, and I'll sprinkle in some voter ID and some military spending. But for heaven's sakes, why is this so bloody hard, Michael Faulkender? I only got 10 seconds.
I agree with you, Larry. This election could not be more stark in terms of, do you want an opportunity economy with private sector growth, or do you want the dependency that the Democratic Socialists are offering?
That's it, buddy. The president is watching you. He likes what you say. I happen to know that for a fact. Mohamed El-Erian, you'll have to settle for me, but I'm watching you, and I appreciate your advice very much. You two guys are terrific, folks.